Warren Buffett's investment was seen as a huge vote of confidence for Bank of America. He told me that he has a lot of confidence in your leadership and the long-term prospects for the bank. I'm wondering, Brian, if you think he is seeing something that other investors are not.
Well, Warren is one of the best long-term investors that ever existed, and that's how he's materialized so much value, as he thinks, decades, not in minutes. And so that difference in philosophy allows him to see what we see and what we're executing on every day, which is the best consumer franchise in the United States, the best commercial franchise in the United States, and one of the top franchises in the world for large companies in investment banking and trading. So if you look across our platform, he sees that. It's been shrouded by a lot of work around getting the mortgage issues behind us and changing capital rules and changing regulatory environments. But that core franchise has won, continues to win every day in the market. That's what will be on the other side of all this, not this other stuff. 2011,
Bank of America stock down 57%. First month or so of 2012, up 31%. There's this lagging issue of public perception and the mortgage crisis. It continues to drag on you guys. Can you give us any idea of what we should expect, Brian, this year from the bank?
Well, you'll expect what we've been doing before. It's just that with time, more things are completed. So 2 years ago, we started on simplifying the franchise, bringing it together so the company be more easily manageable, more easily understood, and basically get rid of a lot of stuff that was accumulated over the years for all the acquisitions. We're largely complete to that. What that has an effect, though, is also our capital ratios came up dramatically. So what you saw after the fourth quarters, you're earning some money, your capital ratios are as good as anybody else's. More and more of the mortgage work is behind us, and so they can start to see the thing coming through. You expect to see more of that this year. Great job getting more customers, great job integrating for the customer the benefits of banking and investing and borrowing on the consumer side and then the affluent side, really working for them. You'll see that. That has never changed. We've been doing that. What we've been able to do now is move away more of the things that aren't important for our company going forward, moving away some of the uncertainty around the mortgage, and we'll continue to do that too.
I want to delve deeply into the mortgage issue. Before I get there, you've called Bank of America a tale of two cities, and you've got the mortgage business and the rest of your business, but I don't think you can look at them independently because at the core of that, you have the public perception issue. You even said on the earnings call, talked about some customers leaving after the $5 debit card fee was announced. It obviously was calculated into your decision to pull it back. So now, how do you make decisions when everything that you do is going to be released in the Twitter sphere, if you will? How much is that people power playing into the decisions that you're making at your bank in this regulatory environment and not being able to issue fees like that?
So the common assumption would be that big institution is not into all the things that you mentioned, Twitter and all this stuff. We do this all day long, so we understand what's going on in different environments. We have 9.2 million mobile customers that mobile interface with us up 50% year over year, 40% year over year. So we look and search for that. It has changed the nature of everything that goes on because the power of the communication network is so different. And so everything we do then has to be mindful of that. So a couple of years ago, we started literally saying, let's be absolutely transparent, let's be absolutely fair. And we changed our overdraft policies before anybody in the industry did. We changed the way the card business ran. We changed the way even in the mortgage business to give a person a one-page piece of paper.
Then why come forward with a fee like that if you knew something like this could happen?
We were making a trade-off that in the environment the customers reacted to, but the trade-off was as interest rates are down and as the behavior pattern of consumers change, we had to make a trade-off of how we were going to replace revenue streams that were lost. And obviously that trade-off didn't work. We tested it, people said it, but the reaction was different than all the experts would have said. So as we go forward, that obviously shapes our thinking, but in terms of how we would do this. But at the end of the day, think about the services we provide. So you're here in Switzerland, you can go in an ATM, pull money out. You can go to the state of Washington, the state of California, and every place, all of that. You can get your card replaced tomorrow morning here if you needed to, if you lost it. All that value that comes from the strength and breadth we have, the customers and us that get a lot of value for the exchange, and we got to make sure we keep that in balance so we can keep supplying it. And that's the difficulty going forward. At the same time, we have to deal with the fact that America is still working itself through the issues of the economic uncertainty, high unemployment. We've got to make sure we're perceived to be what we are, which is fair, transparent, clear, and provide tremendous service. The debit fee brought that all out, and then we put it behind us, and now we'll go forward and make sure we do it right.
Whether it's fair or not, a lot of the backlash against the 1% and the 99% 1% conversation has been against financial institutions across the board. I'd like your take on what you make of that conversation in the United States. Do you think it's an important one, and is it happening in the right way?
Well, I think it's an important one because, in some senses, the reaction to the $5 fee they're all parts of this thing, which
symbolic
is in tough times. People want to make sure that they have the opportunity to get ahead and be successful, and they also want an opportunity to make sure in tough times that they're taken care of. That's an obligation on our society. So I think it's all reflective of that. And so I think financial institutions can be singled out, but I think it's a broader question which is. And this is what Davos has been about, is how all the system works when you're out. It's the best system there is. There's no one that disagrees with it. The question is, at times, it produces excesses and outcomes that people have to look at. And so I think this is about that. And we agree it's an important conversation. We have the conversation because, remember, I employ 285,000 people with a vast range of what they do and vast range of how much of compensation they get. And so as an employer who wants to be the best place for people to work, I have to think about the ramifications. As cost structure is important, I have to think about that. So it is a great conversation, an important conversation. I think it's not capable of a soundbite thing. It has to take some thought process. But behind it is this question of fairness and getting ahead. But the real question behind it is you don't have this when you're growing and people feel optimistic. And the issue is this has been a long time where we haven't been growing as fast as we want, and it's hard to keep the optimism up. And so what you hope is 2012 is a year where you pivot to more optimism and more fundamental growth.
Do you think it could be? Is this a year of rebuilding trust for you guys as an institution and just the industry across the board with the masses?
We have to continue to rebuild trust. Our customers really like what we do. We just got to keep working from that out and make sure what we do. And so that whether it's trust or whatever word you want to use, is to rebuild credibility of all institutions and just keep driving it forward. But a lot of it has to be focused on what's important. That's jobs, that's growth, that's things like that. Dragging ourselves back into debate about what happened 5 years ago is not necessarily going to help that out. Focused on what's going to happen in the next 5 years and 10 years and 15 years, what's happening. I think the dialogue will move there as we move through the year.